Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me is Ritu Singh. These are the top headlines from the startup space. Elevation Capital has raised $400 million in a new fund which will be dedicated solely towards late-stage investments. Elevation will write $20 to $50 million checks and focus on new-age companies that are close to a public market listing. Mukesh Ambani announces the formation of a new AI subsidiary called Reliance Intelligence to bolster its AI offerings, signs a joint venture with Facebook's parent Meta. Jio also launches a slew of products, including AI-powered smart glasses, among others. Website design platform Framer has notched a valuation of $2 billion while raising $100 million in its Series D round, led by current investors Meritech and Atomico. The company reached $50 million in annual recurring revenue this year and aims to cross the $100 million threshold next year. Venture capital firm Andreessen Horowitz is joining other major Silicon Valley investors in backing a new $100 million political network that seeks to influence U.S. artificial intelligence policy, deepening the tech industry's involvement in politics under President Donald Trump, said Bloomberg. Elon Musk filed a motion to dismiss the U.S. Securities and Exchange Commission's civil lawsuit that accused him of waiting too long in 2022 to reveal his large stake in social media platform Twitter, later renamed as X. The lawsuit sought to force Musk to pay a civil fine and give up profits that the SEC said were a result of the violations.
Well, those are the headlines that we're tracking for you today on Startup Street. Now, corporate banking has lagged behind retail when it comes to technology, still relying on spreadsheets, RM calls, and fragmented portals. TransBnk, which is a fintech infrastructure platform founded in 2022, has just raised $25 million in a Series B round that was led by Bessemer to change just that. The company is building a common operating system for fintechs and institutions to access the banking ecosystem. Its single-window platform lets clients use APIs from multiple banks for seamless onboarding, transactions, and reconciliations. But to discuss what's next for the company, joining us now is the company's CEO and co-founder, Vaibhav Tambe. Vaibhav, thanks very much for your time here on CNBC-TV18. But before we get to that funding, start by telling us a bit about the company. You claim retail banking has seen innovation, but corporate still lags. What makes this the right time and the right financial climate for someone like TransBnk to step in?
So thanks for this. And I think what we were getting the request from all our customers during our banking days. So the founders, we all are bankers. Most of the time, they used to ask us for these kind of platforms, especially because the UPI has seen a great outcome in India and globally, right? So we all are transaction bankers, spend 15 plus years ourselves in this particular business, and we understand most of the client requirements well. And so is our team, right? So that actually differentiates us for the building this stack. And of course, the banking partnerships, because we come from the same fraternity.
Vaibhav, in the context of RBI pushing banks to invest more in technology, build internal systems, I wanted to understand what really stops a traditional core banking provider or even a bank themselves from replicating what you're building.
No, banks are extremely excited about building this, but the customer requirement, if you're an enterprise customer, right, be it a lender, be it a real estate developer, or be it, let's say, a media baron, you would require a multi-bank platform, right? You wouldn't really have a single bank catering to all your requirements, especially the large corporate banking guys, right? That's why it's very difficult for banks to build this, because of course one bank, it has to be a network like UPI, right? And that's where we become the differentiated player. And most of the existing big tech vendors in this space have been working on a monolithic stacks, which are again legacy systems. So we come in as a SaaS service provider with a lot of business aspect and a lot of domain expertise into it. So there are two differentiators against the existing incumbents.
Okay, let's get to that funding then. $25 million in Series B. What are the immediate priorities for this capital? Will you look at more tech, talent, or market expansion?
So a couple of things. One, of course, we want to contextualize, the entire, business. For example, if we are serving NBFCs or mutual funds today as a client segment, there are a lot of nuances in that segment. So we want to basically contextualize real estate, pharma, media at some point of time, or maybe let's say FMCG, e-com, right? So we want to hire a specific product guys in those areas. And of course, we require to expand our tech team. We actually have a massive amount of requirement on tech sites. And third, of course, would be the geographical expansion, because the stack is required, multiple geographical banking on a single stack, right?
Well, quickly, in terms of financials, you've hit double-digit million-dollar revenues in under 2 years, and you claim capital efficiency and profitability. Could you break down your revenue model for us and where the margins sit at today?
So, being in the pure tech play, we work with approximately 80 to 85% margin on most of the product lines, right? From the revenue perspective, we have a SaaS or platform piece, which is one of the component with which we start the engagement. And then whenever the transactions happen, we have pay per use or per transaction revenue, or maybe sometimes the products are where we have AUM, asset under management linked revenues, which is percentage of, let's say, a particular amount.
So, Vaibhav, you have 220 clients and integrations with more than 40 banks, but I wanted to know how diversified the revenue really is. Is it that a few large institutions account for most of it? Or how do you mitigate dependency risk then? And at what pace is this base of clients or even growing?
Yeah, great question. So, good part is because we are, after our Series A, we diversified. Initially, we were quite focused on lenders, and our 70-80%, revenue was coming from NBFCs. And now we are pretty much diversified across corporates, fintech, startups, and then lenders. So right now, good part is none of our customer is more than 5-7% of the overall revenue.
And finally, in terms of expansion plans beyond India into Southeast Asia and Middle East, how do the economics of transaction banking infrastructure differ in those markets compared to what you're doing in India? And what sort of financial benchmarks will you track there?
So, see, good part is if you talk about the segment of transaction banking or the business banking overall space, the 85 to 90% of the problem statement remains the same, right? You need to ensure the liquidity management, supply chain finance, or maybe the corporate net banking channels, reconciliation. So most of the fundamental part of the stack would remain the same. What would change in every market is, of course, the banking ecosystem, how mature the particular banking ecosystem is in that market, as well as how open these banks are to extend the APIs or to extend the information, right? So that's why I think probably being a pure tech play, it's a very it's a very logical step to expand in geographies, and we have seen in the last 6 months we've done some pilots. It's a phenomenal response. See, from unit economics perspective, naturally we would have better margins and better, kind of outcome in terms of willingness to pay in those markets. Indian customers are, of course, great customers, and but it's a very competitive market. And of course, we are actually kind of leader in digital payments now, UPI being the story for the globe. But of course, when we expand geographically, the margins would improve.
Well, Vaibhav, that's all the time we had. But thank you so much for joining us here. And we wish you the very best. Thank you.
Moving on, baby care commerce is getting a quick upgrade. Bengaluru-based Pico has raised $3.2 million in seed funding led by Stellaris Venture Partners to build a specialized baby care quick commerce platform. Founded by IIT alumni, Pico aims to solve parents' biggest pain points, catalog fatigue, inconsistent product quality, and long delivery timelines by offering a curated range of baby care products delivered in under 60 minutes with try and buy and instant return options. Now, the fresh capital will be used to expand supply across categories, hire talent, and scale operations, starting with Bangalore before piloting in other metros. Joining me now to discuss this further is Chetan Sharma, the co-founder of Pico, and Mayank Jain, principal at Stellaris Venture Partners. Gentlemen, thank you so much for taking time out and being here with us on Startup Street. Chetan, let me start with you. What specific gap in the baby care market are you trying to solve for that doesn't sort of exist already in the e-commerce and offline player space, right? If you could take us through what's on offer and how you plan to spend the funds that you've raised.
So thanks, Andhani, for having us over here. So these are two very different segments. One is e-commerce and another is quick commerce. Currently, the problems which my parents are facing, and especially moms, as you rightly pointed out, that there's a huge catalog fatigue, while the need is very value-seeking and utilitarian, whereas the catalog is like 2 to 3 like SKUs, which does not really serve their needs, as well as it's served in a very delayed timeline. Moms, especially in the parenting years, they are very time constrained in the early parenting years, and over there, convenience matters a lot. So we come in over there to serve provide the right product assortment for the consumer and give convenience. And convenience is not just defined by the under 60 minutes delivery. It is also defined by the try and buy model, because in the baby care segment, it's a very nuanced topic that touch and feel matters a lot. So what your baby is wearing, what products your babies are going to use, until unless you check that, you are not very sure whether you want to use that for your baby or not. So that whole enabling the touch and feel via try and buy and instant return is also the part of the whole convenience bucket. We believe that neither in the e-commerce and neither in the quick commerce, this segment is entirely served properly for all the categories. While the horizontal quick commerce are covering the section like diaper, wipes, and personal care item, but that is hardly around 15 to 20% of the total consumption. The remaining 80% of the consumption, which is your apparels, accessories, shoes, toys, which also needs a very good curation as well as that try and buy, touch and feel kind of thing, is entirely missing in the quick commerce segment. So we come in to fill that particular space where we're trying to provide the entire segment which a baby care market needs, while enabling convenience through under 60 minutes
Sure.
delivery and buy.
Absolutely. And this promise of 60-minute delivery, right, with try and buy and instant returns, how do you sort of plan to build and sustain the supply chain required for this model? If you could quickly tell us.
Sure. So but there's a very interesting point when it comes to the baby care segment, right? The try and buy for a baby is actually not more than 30 seconds, because when let's say a mom receives a product, a parent receives a product, the touch and feel for them is they literally open the packet, they touch the cloth, whether it's a right soft fabric, cotton fabric or not, and then they will just size to the shoulder or if it's a top, right? Whereas if you see compared to the adult category, the person would actually wear it, try to assess whether it's the right product for them or not. So that can take anywhere between 10 to 15 minutes for an adult, but for a baby, it's hardly a 30-second process. So if in that 30 seconds or extra 1 to 2 minutes, our delivery partner can wait at the house of our customer, outside of the customer, it's a win-win for both of us. First, customer gets all that convenience as well as the right assortment delivered at their homes. Whereas for us, it's a very strong unit economics, because the delivery partner does not really need to go back again to take the return, which happens very frequently in the baby care segment.
Right, absolutely. Chetan, we're running out of time, but Mayank, if you could tell us what made you confident that Pico can succeed in a category where traditional e-commerce players have struggled to sort of crack deep penetration?
So, like Chetan was referring to, a large part of the category is apparels and toys. If you look at these two categories, these are predominantly unbranded categories, fragmented, unorganized categories, and very, very offline dominant categories. While e-commerce has a share, but it's not a meaningful share. We think that, quick commerce presents an opportunity to provide the reliability, the touch and feel, visual inspection that an offline offers. Also, the instant gratification that offline offers. You go to a shop, you get it, along with the doorstep convenience of e-commerce. So it can marry the best of two worlds and potentially disrupt the categories, specifically the two subcategories I spoke about.
Sure. So you think that it could disrupt these categories. But, Mayank, Chetan, in 30 seconds, if you could tell us, you plan to expand beyond Bengaluru in the next 12 to 18 months, right? Which markets will you prioritize first, and what's your strategy for expansion? So
we'll first try to establish ourselves and get a playbook ready from Bangalore. And then from here, we'll start expanding to the metro cities first. All right.
And Mayank, quick commerce is becoming a crowded space, right? So what makes Pico's positioning in baby care unique from an investor's perspective? And if you would also shed light on some of the other sectors that are looking exciting to you.
So look, at least from our vantage, at the moment, it's not competitive, this category. We don't fully, consider horizontal quick commerce companies as a competition, because this category needs specialization. It has a long tail of inventory. So it needs focus and effort. Sure, over a period of time, given the size of price, we do expect challenger brands to come in. And at least our belief is on the team to win against the challenges that might come down the road.
And any other sectors that are looking exciting for you from an investor's perspective right now?
Absolutely. Even in the quick commerce category, several verticals are very, very interesting, including fresh food, including beauty. And I'm sure there are more interesting categories that as investors we can't imagine. And of course, there's an omni-channel business model that we are quite keen on, and the list goes on.
So some exciting sectors there in this space itself. All right, Chetan and Mayank, we're completely out of time, but thank you so much for joining us on the show today.
Thank you.
Thank you so much.
On that note, it is time for us to head into a short break, but don't go anywhere. Beauty brand Renee Cosmetics has raised $30 million in its Series C funding round. We put the founder on the hot seat to find out more. Stay tuned. Welcome back. You're still with us on Startup Street. Beauty brand Renee Cosmetics has raised $30 million in its Series C funding round at a valuation of $200 million. The round was led by Playbook with secondaries from MIDAs, including a mix of primary and secondary investments, with plans to double down on product innovation, offline expansion, and tech-led marketing. Renee Cosmetics is already clocking an ARR of 500 crore rupees and is aiming to hit the 1,000 crore rupee milestone in the next 2 years. Joining me now to talk about the growth playbook and what's next for Renee is Ashutosh Valani, the co-founder of Renee Cosmetics. Ashutosh, thank you so much for taking time out and being here with us on Startup Street. You know, with this $30 million that you've raised at a $200 million valuation, if you could sort of take us through what this fundraise means for Renee at this stage of your journey, and how do you plan to allocate the funds?
Thank you for having me today. I think this is one of the inflection points for the brand where we are now looking to break out. So we really want to use these funds into sort of product development, distribution, and of course, marketing. So those are three major points that we really look to use these funds into. We also feel to achieve that 1,000 crore in the next 2 years, this will be a very crucial point for us and the use of these funds, of course.
All right, sure. You know, you have grown nearly 3x in the last 18 months, right? So what's driving this pace of growth in such a competitive beauty market? You also have, you know, plans to double your ARR from 500 crore rupees to 1,000 crore rupees in 2 years. So what's sort of the growth playbook here?
I think one of the most underrated your qualities of a team is actually execution. So while you absolutely have to understand the market, the consumer, the product, but you have to implement and execute the strategies at the right time with the right mindset. And I think that is what we have done really well to actually bring this growth around, right? Otherwise, what happens is people normally plan it, but are not able to achieve. And I think this is the difference between the team that we have today and hence you see the kind of explosive growth in the past few months that we have shown. Hope this will also continue in the future as well.
All right. And you know, Renee is currently present in about 15,000 outlets, and you have said there's a 10x headroom in the offline retail space, right? So how are you planning to crack distribution and scale presence in tier 2 and 3 cities?
10x is actually a very, I would say, conservative number. We think that the uptake here could be 20x from here. India is a much larger market. What we need to do is we just have to identify the stores, open distributors, have feet on ground, and then just start a sort of geographical, strategical sort of distribution in those stores. And I think that's about it. While we do that, we also focus on the marketing so that there is enough brand pull from these particular stores. I think what we have done for the first 15,000 stores, we just have to repeat 10 times. And I think sort of the numbers will come and show for itself.
All right. You know, and Renee has also built a portfolio of about 200 plus SKUs, right? So what's in the pipeline? What new offerings should we be watching out for? If you could also throw some light on the role technology plays in shaping Renee's next phase.
The exciting times ahead. So we have always been the brand who really innovates and sort of experiments and brings the first of its kinds products into the beauty space in India. We are hellbound to do that even in the future, and you will see a lot more sort of innovative products that I'm not at liberty to say today, but you will see in the very near future, probably in the coming few weeks as well. While we plan to do that, we also plan to expand the IPs that we have already created. IPs like Midnight, IPs like Bollywood Filter, Lumi Glow, and so on and so forth, right? So I think that's one of the plays. Apart from that, I think technology we are using to get accurate data analysis, to get product formulations in place. We are also using it to understand of how a consumer is really behaving towards the repeat of the usage of product, right? So we are trying.
We seem to have lost Ashutosh's connection there. We're just trying to, connect him back. But in the meanwhile, I can just fill you in on what Renee Cosmetics has done. They have raised $30 million in a Series C round and is now valued at $200 million. They have a portfolio of over 200 plus SKUs and are currently present in 15,000 outlets. Ashutosh, do we have you? Can you hear me now?
Yes, I can.
Yeah, hi. Yeah, you were talking to us about, your SKUs and how you plan to grow it.
Yeah, so I think what we're planning to do is expand the existing IPs like Bollywood Filter, Lumi Glow, Midnight Kajal that we just have. So we are going to expand that particular portfolio while we use technology into sort of bettering the formulation and also understanding the consumer behavior towards the product ranges, right? So that we can give better products every batch. So I think that's our focus and goal for the very near future.
And if you could sort of quickly tell us, you have also tested waters in the US, UAE and Australia, right? How do you see sort of the global markets contributing to your growth story going forward?
Oh, absolutely. In the next 2-3 years, see, I think UAE is going to be the entry level to GCC. So I think that is going to be a very interesting story for us. But also, there has not been a big India to the world story, right? And we want Renee to become that particular brand that becomes an international calling for beauty. So I think that's why we are also looking at US and Australian markets and to try and be there very strongly. But I think that will come in the next few quarters, probably not very immediately, but probably in the next 4 or 5 quarters.
Sure. So in the next 4 or 5 quarters. All right, Ashutosh, thank you so much for joining us on the show today.
Thank you for having me.
And moving on, it is Friday and it's time to take stock of all the big deals from the startup world. This week saw a total of 15 deals valued at $101 million. Some of the notable deals include banking infra startup TransBnk raising $25 million from Bessemer, Arkham Ventures, Fundamentum and others, while RuPay credit card issuer GoKiwi bagged $24 million from Nexus Vertex Ventures, Omidyar Network and Stellaris Venture Partners. Fintech startup CredRight got $10 million from Abler Nordic, Michael and Susan Dell Foundation and Unleash Capital Partners. That's not all. Biofuel Circle will raise $8 million from Spectrum, Impact and others, while sales enabler for wholesalers Wiz Commerce got $8 million from Alpha Wave Global, Bloom Ventures and Peak 15 Partners. According to Venture Intelligence, there have been 599 deals this year worth $5.3 billion. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.